In this video, we're going to cover debits and credits. So if you remember from the last video, we have four main types of accounts. We've got assets, liabilities, revenues, and expenses. So if you have it in your head right now that debit means minus and credit means plus, I need you to forget that. So for the purposes of this video series, we're going to learn something different. Each of these different types of accounts have a normal debit or credit balance. So assets have a normal debit balance. And what that means is in order to increase the balance in that account, you debit it. To reduce it, you credit it. Liabilities are the exact opposite. They have a normal credit balance. And so to increase the balance in that liability, you credit it. To decrease the amount in that liability, you debit it. You staying with me? Okay, good. Revenues have a normal credit balance. So again, to increase that balance, you credit it. To decrease the balance, you debit it. Expenses have a normal debit balance. To increase an expense account, you debit it. To decrease it, you credit it. Now, I know you're wondering, well, why do I have a debit card that decreases my bank account? Or why do when I go to the bank, I make a deposit and they say they're going to credit my account? Doesn't debit mean minus and credit means plus? So here's the deal. Your bank account is an asset to you. Your bank account is a liability to the bank. That's your money that they're holding on to that they have to eventually pay you back at some point. So if you look at it from the bank's perspective, if you make a deposit, you're increasing the balance in that liability, which means it's a credit. If you use your debit card or write a check, you're decreasing the amount in that account, which means that they owe you less money back. And that's why it's called a debit card. It's okay if this doesn't totally make sense right now because I'm going to cover some examples in the next video about double entry accounting that'll tie all of this in together. Thanks again for watching. And if you haven't already, make sure you subscribe to our email list so that you get the rest of this video series delivered to your inbox.